Hey everyone, and welcome back to the Deep Dive. Today we'll be diving into Synopsys, that's SNPS for you stock ticker fans out there,
Hmm?
and using their latest financial report as our guide. This report really caught my eye because it talks about a wide economic moat, which
Mhm.
sounds pretty impressive, right? And it also delves into their AI integration and a recent acquisition they made. But
Mm.
here's the catch. Despite being undervalued, the report actually gives a hold rating. I wonder why that is. There are some potential risks on the horizon too, like the whole China economic slowdown thing. We really need to unpack all of this.
Yeah, that's a really great observation. The report does paint a kind of complex picture.
Yep.
On one hand, Synopsys exceeded their Q4 2024 guidance with record revenue of $1.636 billion, dollars, and that's an 11% jump year over year, and their non-GAAP earnings per share climbed 13% to $3.40. Pretty impressive stuff, right?
Yeah, definitely. But then the report throws us a curveball. The stock price actually went down after this, like, stellar performance. What's going on there? Help me understand.
Well, the market seems to be reacting to Synopsys's guidance for fiscal year 2025, which, it wasn't quite as bullish as some analysts were expecting. And it seems that those macroeconomic concerns we mentioned, coupled with the challenge of integrating their recent acquisition, ANSYS, are making investors a bit hesitant.
Okay, so let's dig into those concerns. You mentioned a wide economic moat.
Yeah.
What exactly does that even mean in Synopsys' case, and how does it protect them?
Sure. So basically, it means Synopsys has a very strong competitive advantage, which makes it really difficult for any rivals to encroach on their territory. One element of that moat is their massive library of pre-designed circuit components, known as intellectual property, or IP. You can think of it as like a collection of ready-made building blocks for chip design. So instead of starting from scratch, companies can actually license these components from Synopsys, saving them time and money. This gives Synopsys a huge advantage because building such a comprehensive library from scratch would be a massive, massive undertaking for any competitor.
So it's not just about having great software. It's about having a treasure trove of resources that makes them pretty much indispensable to the industry.
Exactly. And that's not all. Their leading position in electronic design automation, or EDA, which is the software used to design and test chips, is another pillar of their strength. They are particularly well regarded for their Fusion design platform, which is known for its speed and efficiency and the quality of its results. This reputation makes them the go-to choice for many chip designers.
That makes sense. But the report also highlights their Synopsys.ai platform. It seems AI is becoming a big deal in chip design. Can you give us some concrete examples of how Synopsys.ai is actually being used and the benefits it brings?
Well, Synopsys.ai is all about using AI to make the chip design process smarter and more efficient, for instance. It's being used for something called tape-out optimization. Tape-out is the final stage of chip design where the design is sent to the manufacturer. Synopsys.ai can analyze the design and suggest tweaks that can improve the chip's performance or reduce its power consumption, all while ensuring it can be manufactured flawlessly. We're talking about real, measurable improvements in chip performance and efficiency.
So it's like having an AI expert looking over the shoulder of every chip designer, helping them make smarter decisions. That's got to be a game changer for Synopsys customers.
Absolutely. And it's not just about optimization. Synopsys.ai can also help designers explore different design options much faster than traditional methods, leading to quicker turnaround times and ultimately faster innovation.
This AI integration seems like a pretty big deal. But let's shift gears for a moment and talk about Synopsys' partnerships. The report mentions collaborations with industry giants like TSMC and ARM. How do these partnerships strengthen Synopsys' position in the market?
Okay, so these partnerships are critical for a few reasons. TSMC, which is the world's largest contract chip manufacturer, relies on Synopsys' tools to ensure their manufacturing processes are compatible with the chip designs created by their clients. This close relationship ensures that Synopsys' tools are always at the cutting edge of chip manufacturing technology.
So it's about being in sync with the companies actually building the chips. What about the partnership with ARM?
Right, so ARM designs the architecture, the fundamental blueprint for many of the chips used in smartphones and other devices. By collaborating with ARM, Synopsys ensures their EDA tools and IP are optimized for ARM's architecture, making them even more attractive to companies designing ARM-based chips. It's a win-win situation that strengthens both companies.
It sounds like Synopsys has strategically positioned themselves at the heart of the chip design ecosystem. They're not just providing tools, they're collaborating with key players to shape the future of the industry.
Exactly. And speaking of the future, the report highlights some exciting long-term growth drivers for Synopsys, which we should probably delve into next.
Let's do that. What are some of the trends that have you particularly excited about Synopsys prospects?
Well, the continued rise of artificial intelligence is a major factor. This insatiable demand for AI capabilities is driving the need for increasingly powerful and specialized chips, which plays directly into Synopsys' strengths.
I see where you're going with this. AI requires specialized chips, and those chips need specialized design tools. Synopsys is right there, ready to provide those tools.
Precisely. And it's not just about AI. The silicon proliferation we touched on earlier, with chips being embedded in more and more devices, is creating a vast and diverse market for chip design tools. Synopsys, with its broad portfolio of products, is well positioned to capitalize on this trend. And then there's the rise of software-defined systems, where software is taking center stage and hardware is becoming increasingly flexible. This shift requires new approaches to chip design and verification, and once again, Synopsys is leading the way.
It seems like Synopsys is firing on all cylinders, with multiple trends converging to create a very favorable environment for their business.
They certainly are. But
Yeah.
as with any investment, there are potential risks and challenges that we need to acknowledge and explore further.
Absolutely. Let's dive into those risks next. We need to understand both the upsides and the downsides to get a clear picture of Synopsys' overall prospects.
That's the right approach. We need to balance our optimism with a healthy dose of realism. One of the key risks highlighted in the report is the potential for a slowdown in China's economy. As a major market for semiconductors, any economic weakness in China could impact demand for Synopsys' products.
That makes sense. China is a major player in the tech world, so their economic health definitely matters for a company like Synopsys. Are there other geopolitical factors we need to be aware of?
Yes, the ongoing U.S. export control rules, which restrict the sale of certain technologies to specific countries, are another potential headwind. These rules could limit Synopsys' ability to sell its most advanced tools to certain customers, which could impact their revenue growth.
Those are some pretty significant external factors that Synopsys will need to navigate carefully. But what about internal challenges? The report mentions the integration of ANSYS as a potential risk. Can you elaborate on that?
Well, integrating two large companies is never easy. There's always the risk that the process could be more complex and time-consuming than anticipated, leading to unexpected costs or delays. There's also the challenge of merging two distinct company cultures, which could create friction or hinder innovation.
It's like trying to blend two different recipes together. You never know quite how it's going to turn out until you've given it a good stir.
Exactly. And while the ANSYS acquisition holds enormous potential for Synopsys, it's crucial to monitor how smoothly the integration progresses and whether they can realize the anticipated synergies.
So we have this interesting mix of strong performance, exciting growth drivers, and a few potential bumps in the road. Given all of this, I'm curious to understand why the report recommends a hold rating on Synopsys stock. If they're performing so well, shouldn't it be a buy?
Well, it all comes down to timing and investor expectations. While Synopsys might be undervalued in the long term, there are some near-term concerns that are giving investors pause. Due to supply chain constraints and a change in their fiscal calendar, a significant chunk of Synopsys' revenue for fiscal year 2025 is expected to be backloaded into the second half of the year. This could make some investors nervous, especially those focused on short-term gains.
So it's a case of short-term uncertainty versus long-term potential. The market seems to be taking a wait-and-see approach before fully embracing Synopsys.
Exactly. And remember, the successful integration of ANSYS is a key factor to watch. If Synopsys can pull that off smoothly and realize the full value of the acquisition, it could be a major catalyst for future growth.
Okay, so we've covered a lot of ground here, but I think we've laid a solid foundation for understanding Synopsys, their position in the market, and the factors that are influencing their stock price. Before we wrap up, is there anything else you'd like to add? Any final thoughts or insights for our listeners?
I think the key takeaway is that Synopsys is a company at the forefront of innovation, operating in a rapidly growing and evolving industry. They're strategically positioned to capitalize on major trends like AI and the increasing pervasiveness of silicon. However, like any investment, there are risks and challenges to consider.
That's a great point. Investing is never a sure thing, and it's important to do your own research and understand both the potential rewards and the potential risks before making any decisions.
Absolutely. And remember, the world of technology is constantly changing. Staying informed and keeping up with the latest trends is crucial for making smart investment choices.
Well said. We'll be back with more deep dives into fascinating companies and technologies. So make sure to subscribe to our YouTube channel and hit that bell icon so you don't miss out. Thanks for joining us on this deep dive into Synopsys.
So while those macroeconomic factors and the ANSYS integration, those present potential challenges, they don't really overshadow Synopsys' long-term growth prospects. In fact, the report highlights several areas that have me feeling, honestly, very optimistic about their future.
Okay, let's dive into that optimism then. What are these bright spots that have you so enthusiastic about Synopsys' potential?
Well, one area that's particularly exciting is their hardware business, specifically their APS and ZeBu product lines. These are specialized systems that are used for prototyping and testing chips before they go into full-scale production.
So if I'm understanding this correctly, these hardware systems act as a sort of proving ground for chip designs. They allow engineers to put their creations through their paces in a real-world setting before committing to the expense of mass production.
Precisely. And this segment of Synopsys' business has been experiencing remarkable growth, attracting both new and repeat customers. The report suggests that this momentum is likely to continue, fueled by the increasing complexity of chip designs and the need for more rigorous testing and verification.
That makes perfect sense.
Mm.
As chips become more sophisticated and intricate, the tools used to design and test them need to keep pace. So the strong performance in their hardware business is a very encouraging sign for Synopsys.
Absolutely. It indicates that they're effectively meeting the evolving needs of their customers and staying ahead of the technological curve. Another area that deserves attention is their partnership with ARM, which we touched on briefly earlier.
Ah, yes, ARM, a true powerhouse in the world of chip architecture. But why is this particular partnership highlighted in the report? What makes it so special?
Well, this collaboration is particularly significant because it's focused on developing next-generation technologies, specifically chiplets, system-on-chips, SARKs, and advanced systems.
Okay, I'm going to need you to break that down for me. What exactly are chiplets and SOCs? And why are they such a big deal in the world of chip design?
Okay, so imagine a chiplet as like a modular building block for creating chips. Instead of designing a single monolithic chip, engineers can now use chiplets to assemble chips from pre-designed components, much like constructing a house from prefabricated modules.
So it's a more efficient and flexible approach to building chips,
Yeah.
allowing for greater customization and faster development times.
Exactly. This approach allows for faster development cycles, reduced costs, and the ability to tailor chips for specific applications. Now, a system-on-chip, or SoC, is a highly integrated chip that combines multiple functions onto a single piece of silicon.
So it's like a miniaturized computer all on a single chip.
Precisely. So SoCs are found in a vast array of devices, from smartphones and tablets to smart TVs and gaming consoles, and the collaboration between Synopsys and ARM is focused on developing advanced EDA tools and IP that enable the design and manufacture of these next-generation chiplets and SoCs.
So they're essentially working together to pave the way for the future of chip design.
Exactly. This partnership is a clear testament to Synopsys' commitment to innovation and their ability to anticipate and address the evolving needs of the semiconductor industry.
It sounds like they're making some very strategic moves to solidify their position as a leader in the chip design world. But let's shift our focus back to that hold rating for a moment. We've discussed the impressive performance, the exciting growth prospects, and the potential risks. But I'm still trying to reconcile all of that with the recommendation to hold off on buying the stock.
It's a valid point, and it really highlights the complexities of the stock market. Even with a company like Synopsys that has so much going for it, there are always factors that can influence investor sentiment and ultimately the stock price.
So what are the key considerations for investors who might be on the fence about Synopsys? What should they be watching closely in the coming months to make a more informed decision?
First and foremost, keep a close eye on how those macroeconomic factors we discussed earlier play out. The global economic landscape is constantly shifting, and factors like China's economic slowdown and the impact of U.S. export control rules could have a tangible impact on Synopsys' growth trajectory.
It's a reminder that even the most innovative and well-positioned companies aren't immune to the forces of geopolitics and global economics.
Precisely. Second, closely monitor the progress of the ANSYS integration. Look for concrete signs that the merger is delivering the anticipated synergies, both in terms of new product development and improved financial performance.
Remember, a successful integration could be a major catalyst for Synopsys, unlocking even greater growth potential and boosting investor confidence.
Third, pay close attention to Synopsys' execution on those long-term growth drivers we discussed. Are they continuing to innovate in areas like AI-driven chip design, chiplet technology, and software-defined systems? Are they forging new strategic partnerships that keep them at the forefront of the industry?
These are the critical questions that will ultimately determine Synopsys' long-term success and their ability to deliver value to investors.
Now, shifting gears for a moment, I think it's worth highlighting a specific segment of Synopsys' business that's poised for significant growth, their verification platform.
Verification platform. I don't think we've touched on that yet.
Yeah.
What exactly does that entail,
Yeah.
and why is it so important?
Okay. So think of verification as the quality control process for chip design. It's about ensuring that the chips perform as intended, are free of bugs or errors, and can be manufactured reliably. As chip designs become more complex, this verification process becomes increasingly critical.
So it's like the rigorous testing and inspection process that ensures a bridge is safe and structurally sound before it's open to traffic.
That's a great analogy. And Synopsys is a leader in this space with their comprehensive verification platform. They offer a suite of tools and technologies that help engineers thoroughly test and validate their chip designs, catching potential issues early on and preventing costly errors down the line.
I can see how this would be a crucial part of the chip design process, especially as chips become more intricate and sophisticated. What are some of the key trends driving the growth of Synopsys' verification platform?
One major trend is the increasing complexity of chip designs themselves. We're talking about chips with billions of transistors packed into incredibly small spaces. Verifying the functionality and performance of these highly complex designs requires increasingly powerful and sophisticated tools.
So the more complex the chips become, the greater the need for robust verification. What else is fueling the demand for these tools?
Another key driver is the growing importance of software in chip design. As software takes on more and more functionality, ensuring that the hardware and software work seamlessly together becomes, like, paramount. Synopsys' verification platform helps engineers test and validate the interaction between hardware and software, minimizing the risk of integration issues.
So it's not just about testing the chip itself, but ensuring that the software that runs on the chip is also functioning correctly and interacting seamlessly with the hardware.
Precisely. And then there's the increasing pressure on chip designers to accelerate time to market. In today's fast-paced tech world, companies need to get their products out the door as quickly as possible to stay ahead of the competition. Synopsys' verification platform helps streamline the testing and validation process, allowing companies to bring their products to market faster without compromising quality.
It sounds like Synopsys has a winning formula here. They're addressing a critical need in the chip design process, and they're doing it with a comprehensive platform that's constantly evolving to meet the industry's changing demands.
They certainly are, and this strength in verification is just one more reason why I'm optimistic about Synopsys' long-term prospects.
Okay, so we've covered a lot of ground today, from Synopsys' impressive performance and the strategic partnerships to the exciting growth drivers and the potential risks on the horizon. Before we wrap things up, is there any final piece of advice you'd offer to our listeners who are considering investing in Synopsys?
My advice would be to stay informed, do your own research, and make decisions that align with your individual investment goals and risk tolerance. Synopsys is a fascinating company with a lot of potential, but like any investment, it's important to approach it with a balanced and informed perspective.
That's excellent advice. And remember, we're here to provide you with the insights and knowledge you need to make informed investment decisions. We'll be back with more deep dives into compelling companies and technologies, so make sure to subscribe to our YouTube channel and hit that bell icon so you don't miss out. Thanks for joining us on this journey into the world of Synopsys.